Welcome to our final episode of Material Logic Unmasked. Throughout this series, we've examined how capitalism's structural forces shape behavior beyond individual intentions or ethics. Today, we explore how these forces have adapted during the crisis period of 2020 to 2025, a time of pandemic disruption, geopolitical tension, and ecological breakdown that has revealed capitalism's most essential characteristics. Capital doesn't sleep, it mutates. When confronted with resistance or crisis, it evolves new strategies while maintaining its core logic. The period we've just lived through hasn't been a simple recovery from pandemic shock. Instead, it's been a laboratory for capitalism's adaptive capacity, showing us how the system responds to existential challenges not by resolving them, but by finding new ways to extract value from them. The numbers from our recent crisis period tell a stark story. Global wealth grew 4.6% in 2024 alone, but this growth concentrated dramatically upward. Billionaire wealth expanded by $2 trillion in 2024, creating 204 new billionaires, nearly 4 per week. The top 10% now owns 76% of global wealth, while the bottom 50% possesses just 2%. But here's the crucial insight. This wasn't despite the crises of recent years, it was because of them. When lower-income groups were forced to spend savings or incur debt to survive pandemic disruption, wealthy asset holders benefited from lower interest rates that inflated share and house prices. Private equity firms demonstrated this logic perfectly, rebounding 37% in 2024 to $602 billion in investments. As one Blackstone executive noted, some of the best times to deploy capital are in a risk-off world when sentiment is most negative. This reveals a fundamental dynamic. What appears as economic disruption to most people represents profit opportunity for those with sufficient capital reserves. The machinery doesn't break down during crises, it accelerates, finding new pathways for accumulation in the very conditions that devastate working populations. The promise of sustainable capitalism has never been more prominent. ESG investment products surged, sustainable finance grew 34%, and corporate boardrooms filled with net zero commitments. The narrative suggests that market dynamics will naturally select for sustainable practices as consumers demand them and investors reward responsibility. Yet the evidence reveals something different: environmental concern being transformed into another frontier for accumulation. 77% of green bonds report allocation without proven emission reductions, a textbook case of what researchers term greenwashing. When Goldman Sachs launches climate funds while continuing fossil fuel financing, we see the system's structural inability to prioritize ecological survival over profit generation. The voluntary carbon market reached $4 billion in 2024, yet aggregate emissions continue rising. Consider the deeper contradiction. Current growth trajectories require resource extraction to increase 180% by 2050, a physical impossibility on a finite planet. When companies announce ambitious sustainability goals alongside expansion plans that contradict those goals, they're demonstrating capitalism's core limitation. The crisis becomes another business opportunity rather than a constraint on accumulation. Marx described the capitalist state as a committee for managing the common affairs of the whole bourgeoisie. But recent developments reveal something different, what we might call the collapse of relative autonomy, where the state transforms from managing collective capitalist interests to serving narrow segments of capital directly. Elon Musk's business empire exemplifies this transformation. His companies received $38 billion in public support through loans, subsidies, and federal contracts. Tesla's survival depended on a $465 million Department of Energy loan that insiders called critical. Without it, the company would have gone under. SpaceX secured over $17 billion in federal awards since 2015, while Tesla's early profitability relied on selling regulatory credits to traditional automakers. The ideological contradiction reveals the system's adaptive capacity. Musk advocates for reduced government while leveraging massive state resources for private gain. This demonstrates the permanent tension between capitalist ideology, free market rhetoric, and material reality, state-dependent accumulation. When economic power translates directly into political power through regulatory influence, we see the machinery's evolution. This arrangement creates inherent instability. When governments become instruments for narrow enrichment rather than systemic reproduction, they face selection, pressures from democratic processes, and global competition. The system may generate significant disruption before correction occurs. The digital transformation of recent years has created new frontiers for accumulation through surveillance-based extraction from human attention and data. Google, Meta, and Amazon captured 51% of global digital advertising revenue in 2024. Network effects and zero marginal costs naturally produce monopolistic concentration. This isn't market failure but competitive logic reaching its inevitable conclusion. Simultaneously, speculative assets like cryptocurrencies and meme stocks represent what we might call DOGE capitalism, channeling financial energies into circuits largely divorced from productive labor. Cryptocurrencies exhibited extreme volatility from 2020 to 2025, with meme stocks showing price movements tied to social media sentiment rather than fundamental value. This reflects a system struggling with overaccumulation, too much capital seeking profitable outlets. The contradiction deepens when we examine the underlying dynamics. Despite promises of decentralization, DeFi platforms replicate traditional finance's structural flaws with higher leverage and amplified volatility. A Bank for International Settlements analysis found that endogenous constraints to competition allow rent accumulation despite lower transaction costs. The new system exhibits the same concentrative tendencies as the old. Recent scholarship provides robust empirical support for Marx's core predictions about capitalism's dynamics. A comprehensive 2023 study examining 37 countries found a 0.78 correlation coefficient between capital accumulation rates and increasing inequality, strong validation for the thesis that capital concentration produces income polarization. World profit rates declined approximately 25% from 1960 to 2019 across advanced economies, confirming Marx's tendency of the rate of profit to fall through various crisis cycles. The period from 2020 to 2025 has seen inflation combined with absent growth, clear signs that capital has reached a moment of overaccumulation, where increased investment produces diminishing returns. The relationship between economic structure and political consciousness proves more complex than early Marxist theory anticipated. While economic structures create strong tendencies, political awareness develops through cultural, institutional, and ideological mediations. Similar inequality levels produce different patterns of class-based mobilization depending on media ownership, educational systems, and historical contexts. Community organizer Maria discovered that effective resistance requires understanding how material conditions intersect with other dimensions of social experience. When organizing around housing affordability, she expected natural solidarity among residents facing similar economic pressures. Instead, she encountered complex divisions based on homeownership aspirations, racial dynamics, and immigration status that complicated straightforward class-based organizing. Rather than dismissing these complications, Maria developed approaches acknowledging how material interests operate through existing social frameworks. When framing housing as both economic and racial justice resonated more effectively than class-only messaging, she wasn't abandoning material analysis, but enriching it. Housing inequality remained the central material condition, but its intersection with historical exclusion proved crucial for building coalitions. This reflects broader developments in social movement unionism, where labor organizing increasingly adopts intersectional approaches. The AFL-CIO's 2024 reports explicitly argue that economic and racial justice struggles are inextricably bound, recognizing that addressing racism strengthens class-based organizing by building broader coalitions and reducing divisions that undermine worker solidarity. The climate crisis reveals capitalism's ultimate contradiction: infinite growth requirements colliding with finite planetary boundaries. Despite exponential increases in green investments and sustainability rhetoric, global emissions continue rising. This demonstrates how the system responds to existential challenges, not by resolving them, but by commodifying them into new profit opportunities. Carbon offset markets exemplify this dynamic. The 2021 bootleg fire destroyed offsets purchased by companies like Microsoft and BP, revealing how climate change undermines market-based solutions. When project developers receive full profits from selling carbon credits, while large emitters purchase symbolic offsets rather than undergoing genuine decarbonization, we see financialization of ecological destruction. The structural impossibility becomes clear when we examine the numbers. The compliance carbon market traded 12 GT Kaede in 2021, while global greenhouse gas emissions reached 59 GT Kaede in 2019. The offset system addresses roughly 20% of emissions through financial mechanisms, while the underlying productive apparatus continues expanding. Capital creates both the wound and markets the bandage. Material logic analysis reveals why systemic problems require collective organization rather than individual conscience or market-based solutions. When billionaires pledge wealth redistribution while their operations generate inequality, they demonstrate the structural limits of individual action within accumulation-driven systems. The machinery produces outcomes regardless of personal intentions. Collective organization demonstrates proven capacity to create countervailing power. Countries with union density above 50% show 37% lower inequality rates than those below 20%. Municipal broadband systems provide internet access at 40% lower cost than private providers while delivering superior speeds and reliability. Community land trusts remove housing from speculative markets, reducing costs by 30% while maintaining quality and democratic control. Platform cooperatives offer alternatives to extractive digital capitalism. These models don't transcend material logic entirely, but create protected spaces where different priorities can operate, demonstrating that meaningful alternatives can be constructed through organized resistance. Labor movements are undergoing significant revitalization, moving beyond bureaucratic conservatism toward social movement unionism that links class struggles with racial, gender, and environmental justice. The FL-CIO's leadership changes and support for rank-and-file mobilization mark a strategic evolution recognizing that all forms of oppression connect to the same underlying system of accumulation. However, digital organizing presents complex challenges. Research reveals a significant digital activism gap between working-class and middle-class groups due to disparities in access, skills, empowerment, and time. Rather than equalizing participation, digital platforms can reinforce existing class divisions unless organizers use intensive labor to ensure inclusive participation across multiple communication channels. Post-capitalist experiments are being implemented today. Berlin's legal efforts to expropriate major landlords, municipalization of domestic work, and cooperative alternatives demonstrate concrete paths beyond private accumulation. These initiatives represent grounded efforts to build economic systems not based on profit extraction, creating spaces for democratic alternatives within structural constraints. Throughout this series, we've seen how capitalism's structural logic produces consistent patterns across different contexts and periods. From 19th century industrial exploitation to 21st century digital surveillance, the fundamental drive remains constant: converting human activity and natural resources into private profit through continuously evolving methods. Recent empirical evidence strongly confirms Marx's economic predictions while revealing more nuanced relationships between material conditions and political outcomes. Economic structures create powerful tendencies that operate through cultural and institutional mediations, introducing variation and possibilities for different responses to similar material pressures. Understanding material logic shifts focus from hoping for benevolent elites to building collective power capable of constraining capital's logic. The machinery is powerful, but not omnipotent. Organized resistance can produce different outcomes within structural constraints. This perspective reveals intervention points where collective action might redirect system trajectories. As we conclude this exploration of capitalism's adaptive mechanisms during the crisis period of 2020-2025, several key insights emerge. The ultra-wealthy aren't uniquely virtuous or villainous. They occupy positions within a system that rewards profit maximization while externalizing costs. Understanding these structural positions provides more analytical power than moral judgments about individual character. The system continuously evolves new strategies while maintaining core imperatives. Today's green capitalism, surveillance platforms, and state-dependent accumulation represent contemporary expressions of eternal drives. Maximize profit, minimize costs, externalize risks, capture regulatory mechanisms. Capital adapts when confronted with resistance, but fundamental logic persists through mutations. Recent crises have accelerated rather than challenged these dynamics. Pandemic disruption, geopolitical tension, and ecological breakdown became opportunities for enhanced accumulation rather than constraints on it. The next time you encounter corporate sustainability initiatives, technological solutions, or philanthropic responses to systemic problems, examine the structural positions and material imperatives operating beneath surface narratives. Understanding this machinery means we can identify intervention points where organized collective action might produce different outcomes. The machinery is vast and adaptive, but it operates through human institutions that can be transformed through democratic organization. The logic continues, but it's not inevitable.